Yo, what's good, guys? Welcome back to another video on my channel today. Today I'm going to run you through sort of just like a mini boot camp of my strategy, what I trade on a daily basis, the strategy that took me basically out of poverty to becoming a full-time day trader on the market. So yeah, extremely thankful for this strategy and everything that it's done for me in my life and how I'm able to share it with my students and stuff like that. But yeah, without further ado, let's get into it. I'm not sure how long this video will be. I'm just going to go and go until I feel like stopping, until I feel like I've shared enough and all information with you guys. So just go ahead and get your note sheets out and anything you want if you're interested in learning about support and resistance. But yeah, I want to show you guys what this strategy has done for me, man. Like if I go down here onto, you know, my days and stuff like that, like you guys can see right here, like this is the type of results that this strategy is printing. Only 2 losing days in the entire month of July. If we go back to June, only 2 losing days in the entire month of June. Go back to May, only 4 losing days in the entire month of May, and like so on and so on. Like last year too, 19K, 73K, my best month ever. So yeah, this strategy really does numbers for me. It's a profitable strategy. I love it. As well as the students in my Discord right here. Sorry, I just did a giveaway for some Alpha Futures accounts and stuff like that. But yeah, let's go to my student profit posts and stuff like that. Like my profit, my students absolutely cook with the strategy. This is my one-on-one student, Isaac, who just made $10,458 in a day. You know, if we just continue to scroll and scroll and scroll and scroll and scroll, I mean, it's absolutely insane. This is another one of my one-on-one students, Jordan, who made $7,500 in her first month of trading. So these are all my students and they trade this exact strategy every single day. But I'm not going to bore you guys with that stuff way too much. I'm just going to kind of get right into things here and kind of go over the strategy that I trade. So what is the strategy that I trade? Well, if we zoom out here onto the higher time frames, I trade a strategy called support and resistance. Now, my chart looks a little clogged right now. I know that, but it doesn't have to be that way. It's just because I'm too lazy to delete zones right now. But I trade a strategy called support and resistance, basically just looking for price to return to areas on the market that they once made big moves off of. And now we look for them to make moves off of that area again. So that is the strategy that I trade, and it is simple as that. Now, these are my levels on NASDAQ and Q, you know, the trades that I'm taking when I trade NASDAQ and NQ, that stuff. But what I'll do today, I don't want to adjust those because I do trade them on a daily basis. I'll start completely fresh and completely new with a clean slated chart being US 30 here. So what we're going to do is we're going to actually kind of go over what support and resistance is, how I trade it, what I use to trade it, and stuff like that, etc., and all that good jazz. So if we start here by just looking at the basics of support and resistance, let me move my camera out of the way. Support and resistance is it's pretty simple. So support and resistance are 2 fundamental concepts in technical analysis. Understanding what they are and how they work is essential to reading a price chart. Now that's crucial to me. That helped me in my trading journey majorly, is learning about how support and resistance charts, the support and resistance areas and setup is extremely crucial to actually learning trading and learning the trading strategy and, you know, actually just reading charts in general, because you'll see a lot of people these days that'll love to hate on support and resistance. Oh, you're not going to become profitable with it, etc., blah, blah, blah. That's fine. They can have whatever opinions they want. This has changed my life financially, support and resistance. And as I showed you before, it has changed my students' lives. But basically, what is support? In a downtrend, price falls because there is an excess of supply over demand. The price goes lower, then more attractive they become. Those on the waiting to the side, those waiting on the sidelines to buy shares. So at some level, demand that would have been slowly increasing will rise to the level where it matches the supply. At this point, price stops falling. This is the support. So let's go take a look at US 30 here. We have price falling, bang. Now price stops and it starts moving up again. This right here is your area of support. Okay? It's as simple as that. Now, if we go look at resistance, this happens, it's the same thing. It's the opposite. Price moves up because there is more demand supply. There will come a point when selling will overwhelm the buying because the market can't go down forever. Let's say you have price moving up and up and up and up, and then it stops and it comes back down. This will be your area of resistance right here. So let's remember a couple crucial things here. All right, where is my text box right here? Bang. There's some key things I want you guys to memorize here. Support is the floor. Okay, bang. Resistance is the ceiling. Hopefully I spelled that right. I'm sorry. Ceiling is just one of those words for me where I just like never knew how to really spell it. So that's crucial. I want you guys to remember this. Support is the floor, resistance is the ceiling. So if price is trading above a level, price is right here, the level's right here, therefore price is above the level. That makes the level an area of support. Vice versa over here, if price is trading below the level, see, price right here, level right here, price is below this level, that makes the level an area of resistance, okay? Hence the terms I just told you right here, bang, support is the floor, resistance is the ceiling. So make sure you guys are copying these initial notes down and stuff like this. So let's go ahead and get rid of these structures and actually go over something crucial here that I want you guys to sort of be able to get down. Sorry, I'm not doing any like fancy edits on this video. Like I just straight up want to make this video. Like no fancy edits, no camera cuts. I just want to be as transparent as possible with you guys and give you guys like a pretty solid boot camp here. So let's go ahead and take a look here. Let's say we have something that looks like this. Bang, bang. This will be pretty simple to start off. It's not meant to be complex. It's not meant to be hard. Bang. Let's say we have something that looks like this. Well, here we have a point where price stopped moving up and came all the way down. It comes back up to this area. It stops moving up, and then it comes all the way back down again. Then it moves all the way back up, bang, and it moves down again. So basically what I told you, drop in the comments your answer. Go ahead and pause this video and drop your answer in the comments. Is this entire area up here your area of resistance or support? Now, if you drop the word resistance in the comments, you're absolutely correct, because remember, resistance is the ceiling. It is the ceiling point where price is moving up and it stops and it comes back down. Bang. Vice versa, at that point, that would make this area down here our support. Why would this be our area of support? Well, because price stopped and moved up. It came back down, it halted at this very area and moved back up again. It came back down, halted at this very area and moved up again. It came back down, halted at this very area and moved up again. So that is kind of the goal here when trading support and resistance, is we want these areas to be something where price is has extremely volatile moves, whether that's to the upside or to the downside. We want to see that price has extremely volatile moves. Okay, if there's just some one candle move up and then it comes back down, that's not an area right here. You cannot mark this out. Absolutely not. This is not something that I am marking out. I want to see moves where price made a huge move to the upside or a huge move to the downside, something like that. So let's go over something a little more complex than what we just did. Let's say we have something that looks like this. All right, let's say we have something that looks like this. Now, here, let's start from the right, let's start from the left and go on, like reading wise. We have price here, it halts and it makes a huge move to the upside. Well, to me, that's a nice area of support right there. Okay? Price, it halts right here and it makes a move down, but that's not enough of a move for me to be like, hey, I'm going to fully mark this off. But then we come up, we get a move down, we get another move up, and bang, a huge move to the downside right there. Now that's a big move right there. So what I'll do is I'll take my tool. I'm getting a phone call right now. I'll take my tool and bang, bang. And you guys can see right there, these are the types of areas I want to mark off. Same thing right here. There's a huge move to the downside right here. So I'll take my tool and I'll mark it off. You can even mark out this area, get both of these reactions in there, and you can even see it goes back and it touches this very area right here. So this is kind of what a chart can look like when you were looking to map out support and resistance. Now I've showed you how to map out these levels, but what is the point of these levels? What do they actually do for us, and why do we want them? Well, let's go ahead and take some notes here. Get your note sheets back out real quick. So, go ahead and get some water. We can assume that if price is making huge volatile moves, that means that there is big institutional selling or buying going on. Okay? We can assume that if price is making these huge volatile moves, that institutional selling or buying is going on. Okay, so let's put this down here and let's go over something else. If we have a chart that looks like this, and it makes a huge move to the downside and then a huge move to the upside, to where then we can mark out our support area right here, and we can mark out our resistance area right here. Now, I need to tell you guys something. Whether you're a beginner trader, an intermediate trader, whatever it is, I don't know. But at the end of the day, here's what you need to realize. If price is halting right here and making a massive, massive move to the upside, nobody can make that type of move in the market besides the institutions, the hedge funds, the VC firms, all of that stuff, the Wall Street traders. Those are the ones, the big billionaire market movers. Those are the ones that make the market move like this. You didn't make the market move like that. Your friend didn't make the market move like that by placing his trade on his computer at home. Your best cousin didn't make that move on the market because they placed a trade on their Top Step account. Not even your favorite influencer can move the market the slightest bit. Oh, your favorite influencer just made $300,000 today? Okay, doesn't even move the market the slightest bit. Nobody cares about that 300,000 in the market besides him. What moves the market is the big institutions, the hedge funds, the bankers, the banks on Wall Street, all that stuff. They're the ones that move the market. So let's get rid of this now and let's go back to taking notes. If we can assume that price is making huge volatile moves, that means there's big institutional buying or selling going on. If price then returns to one of those areas, we can expect the same institutional buyers and sellers to want to trade that same level again. My spelling is pretty bad. I'm also trying to type quickly just because I'm doing a YouTube video here and I don't want to, waste the whole YouTube video just by typing. So I'm going as quick as I can. So forgive me if it's pretty bad. So that's the idea here. Institutional banks, hedge funds, all that stuff, they move the market. It goes bang, up, down, huge moves. And again, I'm not talking about, little moves that are like, oh, it's just this one candle move and then it comes back down. No, I'm talking about the monster moves, okay? Those are the banks, those are the institutions doing those things. So if price then returns to one of those areas, we can expect, well, the same thing. Use the saying, history likes to repeat itself. I think that's a really good term to use when trading support and resistance, is history tends to repeat itself. Does history repeat itself every time? No. There's adjustments you have to make. There's things you have to do. But at the same time, you really can think about it that way. History tends to repeat itself. It's a probability. Remember, nothing in trading is 100%. It's a probability. So, yeah, the goal there is, let's get our note sheet out again. If I'm just going to call them big buyers and sellers, which are those institutional buyers and sellers, want to be involved in trading those areas, so do we. It's that simple why we are trading support and resistance. There's really not that much to it. If big buyers and big sellers want to enter the market at these areas, so do we. And that is why we mark them off the charts. And that is why I feel support and resistance is one of the most powerful areas on the market. Okay? Nobody actually cares what retail traders do. If you go to Wall Street and you talk to the biggest investment managers and the biggest hedge fund managers and all that stuff, they do not give one crap what us institutional traders do. They have their levels, they have their support and their resistance and their supply and their demand, and they buy the hell out of those areas. And they sell the hell out of those areas if they want to. That is what they are doing with their money. So what is our thing? Our thing is not to try to fight those guys. We're never going to beat them. We're just retail traders sitting at our house trading, live accounts or prop firm accounts. We're never going to beat them. So our goal should be to just get in with them, to be involved with them. You can't beat them, join them. That's the saying here. All right. So take down these notes, jot down these notes. This is our why when trading support and resistance. You have to have a why. Why does your strategy work? What is the edge when you are trading your strategy? And this is it for me right here. Okay. So we'll go ahead and let you guys copy down those notes. Pause the screen if you have to. I'm going to go ahead and delete them. Now, I want to kind of look at some images here just on Google. I'm not claiming to own any of these images or own the content in any of these images. It's just very simple. It's extremely simple. You can see here on the left side of the screen. Let's see if we can get this picture open pretty nicely. Yeah, you can see right here on the screen. Okay, let's make a huge move to the downside. That's a lot of candles right there. Okay, that's some big buying. That's some big selling right there. Well, this red line becomes our area of resistance. What does price do when it comes back up to this very area of resistance? Wow, almost like it did the same thing as it did the first time right here. You can catch a trade in this very level and catch the move down. We have this red level, which is our support level right here. Bang. Price makes a huge move to the upside here. You mark this out as your support level. Price comes back down to the area, and it's almost like it did the same thing as it did right here. That is what we are looking at when we are looking at areas of support or resistance. We are looking at areas where price has made these big moves. We're marking them out, and we want price to return to these areas. Now, you can actually see here, if price breaks through a level instead of bouncing off of it, it doesn't mean you have to delete the level. And we'll go over that in a few here when we talk about different entries you can use on these levels. As you can see right here, price came up to this level. It didn't hold the level again. These two times it held the level and bounced downward off the level. Here it comes back up, it touches the level, but it doesn't hold the level and bounce back down. That's okay. Nothing in trading is 100%. Sometimes in trading, you just have to understand that it's a probability. You have to go off data, and it's not 100%. That's why we have risk management. That's why we have certain things that we do in order to preserve capital and to preserve how much money we lose and or win. Because nothing in trading is 100%. Well, you can see price broke through this level, and it didn't hold at this level. It didn't give us another reaction to the downside. Big institutional sellers, they didn't get involved in the market right there. Is what it is. Does that mean we have to delete this level right here, this resistance level, this red line? Does that mean we have to get rid of it completely? No, absolutely not. You can see what was once resistance flip-flopped to now support. Because remember, if price is under it, that means the level is price's ceiling. If it flips back above it, and starts trading above it again, that means that, price or the resistance level has now turned to the support level because it is the floor. You can then wait for price to come back to the level, and bang, you can take a trade off the level again. You don't have to delete the level just because it didn't hold the same way. All you have to do is wait for price to break above or below the level and then just pull back, touch the level, and you get the retest, and you can take, a trade off of it. Excuse me. Got a tickle in my throat. So it's a pretty simple concept. If we just run through all the images, you guys can kind of see here, it's the same thing that I'm saying. It's the same exact thing that I am saying, okay? You have big moves to the downside, bang. Here's your resistance level, okay? You had a support level right here because it moved up. It comes back down, bang. Big moves to the upside right here. You guys see what I'm saying? It's a pretty self-explanatory concept. There's not much that really has to be thought into it. You're looking for big buyers. You're looking for big sellers where these big moves happened, okay? You're not trading just random things on the chart. You know, let's find another one. Oh, here's another one. Bang. This is on a bar chart, so let's not do that one. Yeah, here's one. That's a YouTube video. So you have a bottoming out level right here. Wow, price makes a huge move, comes back down, makes a huge move. Oh, it touches this area twice and makes a huge move to the downside. Basically, based off all these screenshots that I'm showing you guys should be able to be getting the hang of what exact strategy I'm trading. Not only that, I outlined it completely for you right here. So now let's actually look on the chart here. I got to get some water before I keep coughing. So let's look at it outlined on the chart here. Now, as you can see on my trading view right here, I have a couple different time frames toggled. I have the 1 minute time frame toggled. I have the 3 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, and weekly. Okay. My rule for marking out support and resistance areas is I am only marking them out on the 30-minute time frame, the 1 hour time frame, the 4 hour, the daily, and the weekly. So I could have worded that better and just said I'm only marking them out on time frames that are 30 minutes or bigger. Definitely could have worded that better and saved myself a couple seconds there. But I'm only marking out these levels on the 30-minute time frame or higher, okay? I'm not getting involved on the 15, the 5, the 10, the 3, the 1, the 2 minute, the 10-second time frame. Why is that? Because the higher time frame key levels will always be respected more than the lower time frame key levels. Write that down. Do not forget it. Let's write that down, and I do not want you guys to forget that. So, higher time frame key levels, which is just key levels are just another term for support and resistance, will always be respected more than lower time frame key levels. Okay, we mark out our levels on the 30 min time frame and above. We do not mark out levels on the 1, 3, 5 min time frame, etc. Okay? Take these notes down. So I'm going to delete them here in a few. All right, if you got to pause the video, but I am going to delete them here in a second. All right. Okay. So right now, I'm going to switch down to the 4 hour time frame. Let's just do the 4 hour time frame. All right. Here's a rule I like to use for support and resistance. Okay. Let's write this down too. It's my text. If there is 3 candles, 3 large candles, let's do 3 or more large candles towards that moved towards a direction, I will mark out that area. That's a little rule of thumb. If there's 3 or more large candles that move to that direction, I will mark out the area. Remember? Okay, so 3 or more candles on any time frame that is 30 minutes or above. So let's look right here. We have a big white candle here, a big white candle here, and then a huge white candle here. So I would consider that to be an area of resistance. Now, how do we mark them out? Because this is different than just having arrows on the chart. How do we actually mark these out? So we are going to mark these out by taking it from the body of the candle to the top wick of the candle. Okay? So we have the body, which is right here. That's the body where these candles opened and or closed. And then we have the wicks of these candles, their highest or lowest points when they were printing. So we're going to take our box here. You can use a line, like as I showed you on the screenshots before. Some people use a line. I prefer to use a box. And I'm just going to mark out, something that looks like that. Bang. There's a nice area right there. Price is the bottom part of my zone. The bottom point of my zone is on the candle bodies. The top point of my zone is on the highest candle wick. Now you can go ahead and drag that to the right, and you can wait for price to then return to that area. Bang. So it can, make some moves off this area, and eventually you can maybe take a trade and it comes back down. But now that's not it. For extra confirmation when you are trading a zone, here's one thing you can do. You can take the left side of the zone and drag it. What happens if you take the left side of the zone? You get to see more price action, and if it validated and touched that zone. 1, 2, 3, 4, 5, 6. Look at all the times price touches this zone right here. That is a little something. There's some people that say to me, hey, Jake, I have trouble marking out these areas because I can't tell which areas are valid or not. All right, let's take more notes here. Okay. Let's do a little rule of thumb. Once you mark out an area you think is valid, drag it as far left as you can. The more times price has made a reaction off the zone in the past, the better. Okay? Little rule of thumb there. If you need help identifying if your zones are good or not. Once you mark out an area you think is valid, drag it as far left as you can. The more times price has made a reaction off the zone in the past, the better. Get used to that. That can severely help you mentally and confluentially when you are taking a trade. This little rule of thumb right here. That is something that always helps me. You can see I mark out this area based on this big reaction to the downside right here. But if I drag it to the left, you can actually see how many times price has touched this very area right here. Let's do some more real quick, and then we'll do some back testing of it on TradeZella. Well, clearly this is a pretty big move to the upside here. Price comes down, it halts right here, and then it starts moving up. We have two big candles here, a slight pullback, and then a huge move to the upside right there. That is a huge move of support right there. So what do we do? We'll zoom in. We'll find the body of the candle that started the move right here. There's the body, and you find the lowest wick. Remember, it's body to wick. You can then drag it to the right and then wait for price to come back to the area and give you some sort of move. Bang. But what did I say? Our little rule of thumb. Drag it as much left as you can. Looks like that's it. We can get a lot of validation from seeing if there's a lot of reactions in the area. Oh, look, bang, reaction right here. Bang, reaction right here. Oh, look, more reactions here and more reactions here and here. Oh, look, more reactions here. So I'd say this is a valid area. The more reactions off the area, the better. That is how you are going to find, your support and resistance areas. So now I'm going to go ahead and pull up some back testing. We'll do a couple examples here. Bang, back test. Start from scratch. Bang. We'll do it on NQ because that's what I normally trade. Bear with me here, guys. I'm just going to pull this up real quick. Just go back to like last year sometime. Let's not think too much into it. And I'm only trading New York session, so 9:30 a.m. Eastern time, and then I usually hop off the charts at about, I don't know, 10:30 in the morning, 10:45 in the morning. So yeah, that's what I do. So let's pull out this and let's get this back testing. And let's just do like $100,000. Bang, create session. All right. So first thing I'm going to do is do my top-down analysis. I'm going to start on the 4-hour time frame. And again, as you guys can see at the top, we are at 9:30 here. I'd say this is a pretty nice area of resistance right here, or of support right here. Let me get my drawing tool out. Why? Because price halts right here and makes a huge move to the upside right there. So I'd say that's pretty, and again, one thing I want to clarify, it doesn't have to be just 3 big candles in a row. You can see right here, there's a little red candle before price moves up again. That doesn't mean anything. It's just a little red candle. As long as the overall direction that you are looking at forms a massive move to the upside, that's more of what matters. So let's take this volume thing off the screen real quick just for purposes. So we'll go ahead, we'll find body to wick right here. Bang. I'd say that's a pretty nice area right there. And then you drag it to the left, you can clearly see there's more touches on the area. I'd say that's a pretty valid area. Looks good to me. Same thing here. We have a pretty large move to the downside here. So I'd say we could mark off that body to highest wick right there. Bang. We drag it to the left. Let's see. We can clearly see that there's more touches. We got touches here, touches in here, and then we could drag it to the right for future trades. Now, if we head down into this level, we can see right here, that's a massive candle to the downside. I know I said you should look for 3 candles or more, but when you have a candle that big, it's almost like, wow, there's a lot of selling going on there. I should probably just mark that off. So I'm going to go ahead and mark that off. Drag it to the left if I can grab it. Bang, and you can see all the touches that price does in it. Now, I'm doing this on the 4-hour time frame for purpose of this video, but like I said, go ahead and mark out any time frame above 30 minutes or above. You can mark out as many as you want, etc. So let's actually go down to the 1-minute time frame now for our entry, and let's see if we get anything good to take a trade off of. Now, as far as entry goes, that's not really the point of this video. I'm more showing you guys how to mark out support and resistance. How you guys decide to enter on these levels is different amongst all of you and what you're comfortable with. But me personally, I like to mark them. I like to enter based off of head and shoulders patterns or double tops. So let's see what we end up getting here. It's 9:30. Price moves up. Okay. Does it pull back into the area for us? Yes, it does. So what a double bottom would be at this point is, okay, well, we have price that made a nice reaction here and it moved up. That's bottom number 1 within our large area here. If price comes down to the same area right here and creates another bottom, that would be bottom 2. So there's bottom 2 right there within this area. Oh, we're not going to get it. Price breaks under. Oh, we start breaking under. Okay. Now, I think this is a good point to potentially take a trade. Well, why is that? Because price has come back to this area. It's rejected off this area several times, as we can see by all of these rejections, and we're in that same support level that we, marked out because of all the reactions that it had. So there's multiple confluences here to take this trade. So I went ahead and entered myself into the position, and I'm going to watch it hit take profit right there. So that's a specific example exactly of what you can do. You want to see price sort of make these moves. Now, this right here is what you call a head and shoulders pattern because, this was a perfect entry. You have shoulder 1 right here, you have the head right here, and you have shoulder 2 right here, and price starts breaking out of the zone, breaking structure right there. So, that's another entry that you can use in these areas. But I hope you guys sort of got the grasp and the understanding of what support and resistance trading is and how it can severely help you. And I appreciate you guys all checking in. So if you're interested in working with me and becoming a one-on-one student of mine, or being in my Trading Discord, those links will be down in the description. But I hope you guys appreciated the long video here to continue to work and put effort in and stuff like that. So yeah, appreciate all of you. Talk soon.